Yes, guys, so welcome back. Now, if you remember the roadmap of Ind AS that we have been discussing over the past couple of sessions, roadmap 1, 2, 3, and 4. 3 and 4 were only belonging to banks, NBFCs, and insurance companies. The first two roadmaps were applicable to any other enterprise which is a non-NBFC. Now, my question is, in every roadmap that we came across, net worth was an important criteria. Look at the phase 1. Either a listed or an unlisted enterprise having a net worth of at least 500 crores shall be covered under the category of phase 1. Look at the phase 2 criteria. All listed enterprises, irrespective of their net worth, but unlisted enterprises only if the net worth of the unlisted enterprise is at least 250 crores. Correct? Phase 3, banks, NBFCs, and insurance companies having a net worth of at least 500 crores. Phase 4, banks, NBFCs, and insurance companies having a net worth of at least 250 crores. So in all four criteria, I find that the word net worth was the most important. Now my question is, when net worth was most important, I also need to know how to define the net worth. What are the inclusions in the word net worth? What are the exclusions from the word net worth? How do I calculate net worth? If you remember, I did mention this. We did discuss about how to calculate the net worth, what are the inclusions and exclusions in net worth, and on what basis should the net worth be calculated. If you remember, I told you. Net worth should be computed based on IGAAP financials based on the most recent audited annual financial statements. It should be based on a most recent annual audited financial statements on or after 31st March 2014. For any financial year ending on or after 31st March 2014, if the net worth criteria is satisfied, then it falls under either of the roadmaps of Ind AS. Clear? Now, what were the inclusions and exclusions? We did discuss about this. Let's see. Net worth should be calculated based on paid up share capital plus securities premium added with all reserves created out of profits reduced by accumulated losses, which is P&L debit balance, or any miscellaneous expenses not written off. Net worth should be computed based on the recent audited annual financial statements after the date of 31st March 2014. After the date of 31st March 2014. Now, when I said this, first you need to come across the logic of saying what are the different practical experiences that we come across when we deal with this net worth. Let's look at this concept now. There were multiple ITFGs which are related to it. So let us start discussing about one ITFG after other on what is this net worth criteria being satisfied. First one, net worth criteria treatment of ESOP reserve. What is an ESOP reserve? ESOP reserve is basically created in compliance to Ind AS 102. Your Ind AS 102 or earlier a guidance note on share-based payments to employees, you create a particular reserve to the extent of the fair value of options granted to employee. If you remember your CA Inter, you did discuss about this ESOPs. The accounting for ESOPs required a certain reserve to be created, and such reserve will be transferred to share capital once these options are exercised. If the options lapse, then this amount of ESOP reserve will be transferred to P&L. Now, if you had a doubt on how was the ESOP reserve created, then let me just recollect back this. Whenever you wanted an ESOP to be created, I'll just give you an example, guys. Let's say The ESOP was 100 options. Its exercise price was, let's say, 20. Fair value was 30. And vesting period was 3 years. In such cases, every year I used to record an entry. What was the entry that you record? Staff cost account debit, or you can use another name, employee benefit expense account debit. You use whatever name you want, irrespective of the name, the treatment shall be the same. To ESOP reserve or share-based payment reserve account. How do you create or calculate this amount? How many options were there? 100 options. 30 fair value of option. Vesting period is 3 years, so 1/3 every year. Therefore, I used to normally create this value for 1000 rupees every year. Like that, I would have created this reserve for 3 years. Correct? Now the question is, such kind of an ESOP reserve that you have created, should it be included in computation of net worth? He's asking you exactly that question. Should this ESOP reserve be part of a net worth calculation? Answer is yes. Then you will ask me, why yes, sir? Why yes? Because if you remember, I was told that I would only include reserves which are created out of profits, right? When you said created out of profits, how can you say that this particular amount is created out of profit ESOP reserve? I'll tell you. Because this part of staff cost that I find here, or the employee benefit expense, was every year charged to P&L. So if I'm charging it to P&L, that means I'm reducing the P&L to that extent so that I can increase my ESOP reserve. Therefore, I can say for sure that this ESOP reserve is created out of profit. Is created out of P&L or created out of profits. Therefore, ESOP reserve should, it is created out of profits since your staff cost is charged to P&L. Therefore, I believe that this ESOP or this ESOP reserve is a reserve which should necessarily be included in the computation of net worth for checking whether the application of IND AS is to the company or not. Check the solution what he has given. ESOP reserve is required to be included while calculating the net worth of a company. However, this clarification is only for the purpose of IND AS application and should not be applied in analogy for determining net worth under any other provisions of Companies Act. So that means he's saying this is only for computation of or determination of IND AS application. Never include ESOP reserve under any other provisions of Companies Act. Other provisions of Companies Act I'm not bothered about. Here today my discussion is only about application of IND AS. For the purpose of IND AS application, computation of net worth of an enterprise should include ESOP reserve because such ESOP reserve was 100% created only out of the profits of the enterprise. Government grants considered as a capital reserve. Guys, if you remember AS11, AS12, that is accounting for government grants, there was a classification of grants into 3 categories. Revenue grant, capital grant, grant in nature of promoter's contribution. I'm talking about IGAPs, guys. So please remember, I'm talking about IGAPs here and I'm saying as per AS 12, that is accounting for grants, accounting for government grants, I'm saying these government grants are classified further into 3 categories for the purpose of your accounting. What are the 3 grants? The first one is called as revenue grant. Second one is called as capital grant. And the third one is called as grant in nature of promoter's contribution. Grant in nature of promoter's contribution. When I look at government grants, guys, first one under revenue grant would have been straightforward credited to P&L. It relates to revenue items which have been charged to P&L. So this grant will be credited to P&L. But if I look at a capital grant, then in the case of capital grant, either I will reduce from the asset, from value of asset, or alternatively, another treatment is also proposed where I will transfer to a deferred government grant account. Like I told you, even though you know AS 12, I assume that you people don't know, so I'm explaining the entire process of AS 12, that is accounting for government grants. In case the grant is in nature of promoter's contribution, in this case, I will transfer to capital reserve. Grant as such is always a gain, guys. But depending on the nature, there is separate accounting processes or accounting procedures which have been given under AS 12. So grant in nature of promoter's contribution has been transferred to your capital reserve is what we have just discussed. Now my question is, such capital reserve arising due to a grant received in nature of promoter's contribution, should it be included in the computation of net worth? Because capital reserve is also a part of a reserve in the company. Let's see. Read the answer. Answer is yes, guys. Capital grants also, capital reserve should be included. The capital reserve as arising pursuant to a grant received from government, which is in nature of promoter's contribution. On a literal interpretation of the definition, it may be concluded that the capital reserve in the nature of promoter's contribution should not be included to calculate net worth as the same as it explicitly mentioned in the definition of net worth. However, in substance, the capital reserve is a nature of promoter's contribution, is a capital contribution by the promoter, and therefore should be included in computation of net worth. Further, AS 12 also state that government grant in nature of promoter's contribution shall be recognized within the shareholders' funds. Therefore, capital reserve should be included in computation of net worth for checking your application of IND AS. However, it may be noted that the capital reserve should be included in net worth only for the purpose of IND AS application. The definition should not be applied by analogy in determining net worth as per other provisions of Companies Act 2013. This is exactly what we said, what we have derived. The answer is absolutely right. Last one before we conclude this concept of net worth, guys. I think we have one more. Last two. A debt listed company has a net worth for the last 3 years as follows. 31st March 1260. In 2014. In 2015 it was 1411. But in 2016 it was 485. Whether the company is required to comply with IND AS starting from the financial year 17-18 onwards. Guys, if you look at the net worth have already exceeded 500 crores. Has already exceeded 500 crores. But subsequently, as on 31st March 2016, that is the date of first adoption of IND AS under phase 1 category, it is only 485.22 crores. Therefore, it fell below your concept of 500 crores. However, your net worth criteria should be considered starting from 31st to March 2014 or thereafter. Therefore, after those days, you already find that the company's net worth has exceeded 500 crores. Therefore, it has to apply the IND AS as if they were phase 1 company starting from the financial year 16-17 itself. Even though at the beginning of 2016-17, the company's net worth is less than 500 crores, your net worth criteria should be on or after 31st March 2014. Therefore, it has to be under phase 1, should prepare IND AS financial statements for the year 16-17 itself, the date of transition being 1st April 2015. Net worth shall be calculated based on the standalone financial statements for the company on 31st March 2014. Accordingly, if the net worth threshold criteria of a company is once met, then it is required to comply with IND AS irrespective of the fact that on a later date, the net worth has fallen below the specified criteria. In view of the above, Company A is required to follow IND AS for the financial year 2016-17 itself. It may be noted that ITFG clarification bulletin addressed an issue on 31st March 2014. An entity is listed. However, subsequently the entity gets delisted on the mandatory application date. In the said issue, it is clarified that immediately before the mandatory date, if the threshold criteria is not met, it should not be required to comply with IND AS. So, irrespective of the fact that 31st March 2014, the criteria was met. In this regard, it is clarified that the above guidance was only related to the listing criteria and not applicable to the net worth criteria. 31st March 2014 listed, having net worth of more than 500 crores. But 1st of April 2016 unlisted, then the listing condition is not satisfied. But net worth criteria will be applied starting from 31st March 2014 or any other financial statements drafted after that date. Here, negative net worth criteria, guys. I told you, listed company irrespective of negative net worth, IND AS shall apply. Will the following companies with negative net worth are required to comply with IND AS? Company A is listed enterprise with a net worth of negative net worth of 600 crores. Company B, unlisted enterprise, having a net worth of negative net worth of 300 crores. Part A, listed enterprise, negative net worth still should be covered under phase 2. Under phase 2, all listed companies, irrespective of the net worth, should be covered and they should start preparing their financial statements starting from the financial year 17-18 onwards, their comparative previous financial year being 16-17, date of transition being 1st April 2016. Look at the part B. Unlisted enterprise with a negative net worth of 300 crores should not be covered under IND AS, because unlisted enterprises will be covered under phase 1 only if their net worth is 500 crores or above, and under phase 2 only if their net worth is 250 crores or above. Here it is a negative net worth situation, so they will be only following or they will be preparing their financial statements only as per Companies Accounting Standard Rules 2016 or 2006 unless they voluntarily expect to adopt IND AS. Read. IND AS shall be applied to companies both listed and unlisted from 16-17 if the net worth is 500 crores or more. Therefore, if the net worth of a listed company or an unlisted company is negative, then IND AS shall not be applicable for financial year 16-17 under phase 1 criteria. Accordingly, the listed entity A or B shall not apply IND AS for the year 2016-17. However, IND AS roadmap for 17-18 shall apply to all listed companies having a net worth of less than 500 crores, but there is no lower threshold, but should only apply to unlisted enterprises which have at least a net worth of 250 crores or more. Accordingly, IND AS shall be applied to company A for the financial year 17-18, whereas it shall not be applicable for company B unless the net worth criteria has been met. Got it? Last question. Company X on a standalone basis has a net worth of 250 crore but below, above 250 crore but below 500 crore. In the financial year 2013-14, that is at the end of 31st March 2014, they have exceeded 250 but they are less than 500, falls under phase 2 criteria, as well as even for financial year 14-15 as well, but is expected to exceed 500 crore in the financial year 15-16. Guys, 15-16 is still before the first phase, where X has been required to comply with IND AS from financial year 17-18 under phase 2, given that their net worth is below 500 crores on 31st March 2014. 31st March 2014 or any other subsequent date. So 31st March 2014 is not the only date. The company X was a company existing as on 31st March 2014 was already falling under the threshold itself, irrespective of the fact that the net worth as on 31st March 2016 might have been above 500 crores. Guys, answer is wrong. You cannot put it under phase 2 category. This falls under phase 1 because at the beginning or at the date of first adoption of IND AS under phase 1 category being 1st April 2016, the company X has complied with the net worth criteria of being more than 500 crores. Any financial statements drafted on or after 31st March 2014. So 31st March 2016, if they are satisfied the net worth criteria of 500 crores, they have to comply starting from 1st April 2016 or for the financial year 16-17 itself. Look at the answer. Company X has a net worth of 250 crores but below 500 crores in 13-14 as well as 14-15, but is expected to exceed 500 in 15-16 and will be preparing financial statements on IND AS basis starting from 1st April 16. That means it shall be considered to comply with IND AS under phase 1 category, preparing its first IND AS financials for the year 16-17, where the date of transition is 1st April 15. It should not be considered as an enterprise falling under phase 2 category. Here, and that will bring us to the end of discussion on your roadmap of IND AS and also the net worth criteria. So guys, we have completed a very detailed discussion on two things. One is a roadmap where we have seen 4 phases. Along with that, we have also seen the ITFGs related to it. We have seen the computation of net worth, which being the very primary category based on which the IND AS shall apply. We have also seen the ITFGs related to the computation of net worth. Here, that will bring us to the end of this discussion on roadmap to IND AS. We'll stop our discussion here to move into the more serious elements of your syllabus.